Weston, who joins us from RG Markets in Melbourne. And Chris, let's just start with Europe. Let's talk about the euro. Of course, big movements there. Pretty much stuck in a trading range, though, of 122.50 to 125. Until we know more about whether Spain actually says yes to those bailout funds, we really don't know which way the euro is likely to take. We've had some shorting of the currency pretty much off the cards at the moment. We saw Pete Maguire earlier saying that he thinks that's going to start up again. What's your view? Do you agree? And where do you think it will be going, especially on this conditionality that Spain won't be in a rush to take funds just yet?
Well, they're not going to be in a rush at all. I mean, we've got the EU ministers meeting, finance ministers meeting in a month. We've got the summit in 6 weeks' time, and if you look at Spain in its entirety, they don't actually have to go into the funding markets and raise, probably using the front end for at least until October. So they're in absolutely no rush to get on with this at the moment. There was an article in one of the French press last night. It's basically saying, yeah, we want the same condition. We don't want any increased conditionality. We've already had conditionality because of what's been going with the banks. The fact that we had a big bank bailout suggests that you know, we don't want to have an increase of that, and rightly so. I mean, I think personally they've put some hard yards through their economy. Things hopefully will start stabilising going into the back end of next year. But that's clearly the situation. They are in no rush to take these bailout funds, and that's exactly what Mario Draghi has done in terms of you know, having this kind of quasi-political sense. Some people are arguing perhaps he should have just gone down the out-and-out QE road. He could have done that in exactly the same mantra of this that monetary transmission mechanism has been broken as well, and could have got around it exactly the same way. I think, you know, you have to put a lot of onus onto the governments as well. So, yeah, I think until we get a clarity, until Mr Rajoy comes out and says he's willing to take the bailout funds, which he's signalled that he's keen to have a look at the conditionality attached to that, I think that you're right that the euro is going to trade in a bit of a range. There is still a lot of people suggesting by year end that we're going to see the euro at 120. I personally think if we see Spain and perhaps Italy coming out and accepting the bailout funds further down the line, that would be a very big positive. The issue with euro weakness for me would come if we saw it unsterilised. If we actually saw bond buying which is unsterilised, i.e. expansion of the monetary supply, then that would generally be very, very negative for the euro. It would actually see the euro trade very differently from the Australian dollar. The euro would weaken, but the Australian dollar would rally because of the expectations of risk on, and then that would be the clear differentiator. But yeah, I think some very interesting comments from the Estonian contributor to the ECB last night, coming out that any kind of bond buying by the EFSF or the ESM would be sustainable and substantial, but there would be conditionality attached to that. When asked, what do you think about Germany, he came out and said they're just one vote in this whole process as well. So that's a very interesting comment. At the moment, we're in a bit of a holding pattern until we get some clarity, but I think dips personally will be bought on this market, especially in the euro and the Australian dollar at the moment.
So you're okay. Are you implicitly therefore ruling out Draghi intervening? Because people are saying, you know, put some stop losses into this.
No, I sit in the camp that until we get clarity, people will give Draghi the benefit of the doubt, i.e. the Draghi put, and therefore I think any weakness in the euro right now, if you got down to about 123.20, 123 the figure, you've got that downtrend in place from the May downtrend. I think people will be looking to buy. Actually, I think it's the opposite way. I personally would be looking to add longs at the moment. Yeah, I don't think you know, Europe's from a growth perspective, it still argues to be weaker than where it is right now. But I think, you know, people will be looking to buy dips in the Aussie. I think people will be looking to buy dips in the euro until we get some clarity. But I just think until we get actually Mr Rajoy saying yes, which I think he probably will do further down the line, yeah, I think that we can see a tactical bounce longer term in the euro. And then I think perhaps it gets into the year end when you start saying, you know, it depends on what actually happens, whether it's sterilised or not. So I actually sit in the other camp right now that I'll be buying dips in the euro.
What do you make of the S&P downgrades on banks today, short time ago? Is that priced in? Did you see that one coming? Particularly when you see Bankia caught up in all of that. That was meant to be a kind of ring fencing, was it not, of some pretty bad entities. And now it's kind of not escaped the S&P's eagle eye that it's far from ring fence. It looks pretty ropey.
Well, whether it was priced in, yeah, I don't know. I mean, I think if you look at how the euro's trading, it's just a few pips shy of the 124 level at the moment, and we've also had another downgrade to Greece overnight as well, which hasn't really materially moved the euro in any shape or form. So I guess you can make a pretty clear argument that these ratings, especially to banks as opposed to sovereigns now, are having less and less effect on the overall side of things. You know, we know that Bankia are getting life aid from the government, so they don't need to go and raise money in the market, hence why you'd be worried about a credit rating downgrade. So I don't think it's such a big issue now. What we saw last night from Greece was quite an interesting issue. What we're seeing now is, I think Greece are doing some hard yards there of identifying this 11.5 billion in cuts. And I think the chances now of actually having a write-down for a further restructuring of their debt, including the IMF, including the ECB, or what they call official sector involvement, OSI, are increasing by the day, given the comments we saw from the IMF. So I think there's a very good chance. In fact, I think it's inevitable that further down the line we are going to see Greece having another restructuring to their net present value further down the line as well.
Just because they haven't to identify some cuts, thank you very much, let alone implementation.
Well, I think just the comments that we saw from the IMF the other day, saying that they would like to see, and this, you know, maybe it's in fitting with that, but I think the comments from the IMF said, look, we want to see Greece's debt to GDP levels well below the 120%, which was previously agreed on, which to get down to those levels, you have to involve the biggest holder of Greek debt, which is the ECB and the IMF as well. It has to happen. So, yeah, I think those comments really solidify that for me.
All right. Thank you, Chris. Talk soon.
Thanks.
Corporate news now, and Stockland tried to warn investors to expect a weaker full